In the realm of American capitalism, banks stand as the bedrock, laying the foundation for the cherished American dream. However, if we go back to the 1930s, this dream was not equally attainable for all Americans. The peak of racial discrimination cast a pervasive shadow across the nation. For many African Americans, the prospect of owning a house or a business was no more than a distant dream. It was an era when black people were not allowed to enter banks. But how can one think that a young black shoe polish boy can rewrite the history of banking by owning not just one but two national banks, challenging the barriers that once banned black individuals from these financial institutions, and helping the Negro community? But how did he play this money game at the highest level against all the odds to achieve massive wealth and success? Let's find out. This is the story of Bernard Garrett, the black businessman who defied the oppressive era of Jim Crow to build an empire. His story is one of resilience, innovation, and the pursuit of the American dream. Here, we'll dive deep into the emotions and events depicted in the movie The Banker, with Anthony Mackie playing Bernard Garrett and Samuel L. Jackson as Joe Morris, incorporating real-life incidents not shown in the movie. Growing up in Texas during the 1930s, Bernard witnessed the systemic discrimination that denied black people access to basic rights, including the simple act of entering banks. Starting as a shoeshine boy, Bernard had a savvy business mind. He strategically set up his stand right in front of the bank, serving the rich white folks. He's not focused on making money from shining shoes. Instead, he works slowly to catch the financial secrets of the white customers. After they leave, he writes it all down in a notebook. What Bernard wants is the valuable financial knowledge he overhears. Even though it's 1939 in Texas, a place where black people face a lot of discrimination, Bernard dreamed of being wealthy. He worked odd jobs, completing the 11th grade in Houston and running his own cleaning business. Garrett knew that he would need to leave the racial oppression of Texas if he wanted a chance to become a wealthy entrepreneur. In a beat-up van, Garrett, his wife Eunice, and their small children drove to California in 1945 in pursuit of opportunity. After arriving in the Golden State, Garrett kicked off another cleaning service and a waste paper collection business. With time, he managed to save up enough money to purchase property in Los Angeles. Bernard begins his journey as a real estate agent, diligently scouring the city for available houses. Through careful observation, he discovers a significant imbalance. The black community in Los Angeles is densely populated, while many houses in the white community remain vacant. Despite the black community having both rental needs and financial strength, there's no market catering to their requirements. Recognizing a lucrative business opportunity in real estate speculation and renting, he identifies a white-owned apartment, though in poor condition. Approaching the owner, a white real estate investor called Mr. Barker, he proposes a deal, pointing out that only half of the apartment is currently rented. He suggests selling it to him for $30,000 up front and an additional $5,000 when all the rooms are occupied. While the owner appreciates the innovative idea, he hesitates due to the perceived risks associated with such a venture. Before departing, Bernard conveys his understanding to the Barker. While saying goodbye, he notices the Barker's calendar, a gift from a local bank manager. Bernard gets an idea and goes directly to the bank to meet the manager to apply for a loan using Barker's name. The manager's secretary, who discriminates against black people, won't let him meet the manager. Bernard waits outside the bank for hours until the manager comes out. He informs the manager that he is associated with Barker, a wealthy customer of the bank, but the manager quickly rejects his loan request. That night, Barker calls Bernard and asks if he used his name to try to get a loan. Bernard says he would still be a shoe polish boy if he had followed the business customs and apologized. Surprisingly, the owner doesn't blame him but admires his determination. The owner decides to guarantee the loan for Bernard. So, Bernard gets his first loan from the bank and buys the property. His journey to wealth gained momentum when he teamed up with Barker. Garrett negotiated below the asking price for properties that needed fixing, securing small loans from Barker and a bank to renovate them. They made a deal. Garrett would rent out the buildings, repay the loans, and turn a profit. This way, he achieved two goals: making money and offering housing to black individuals in an integrated neighborhood. Barker and Garrett formed a partnership where Barker became the public face of their deals, while Garrett operated behind the scenes. This approach was necessary due to the challenges of obtaining capital for African American entrepreneurs at the time. By 1954, Garrett's net worth reached $1.5 million, equivalent to $14.3 million today, making him one of the wealthiest black individuals in the country. However, he aimed for more significant deals. After Barker's sudden passing, his wife inherits his share in the company. Unfortunately, she holds strong discriminatory views against black people and refuses to cooperate with Bernard. Arrogantly, she offers to buy Bernard's shares at an unfairly low price, threatening to sue him if he disagrees. In an era where racial biases often influence court decisions, Bernard faces a daunting challenge. Unwilling to accept such unfair treatment, Bernard decides to take legal action. However, he needs someone to testify and prove his cooperative relationship with the late Barker. Initially considering the bank manager, Bernard discovers that the manager has already sided with the widow, avoiding any cooperation with him. Disheartened, Bernard stands in the bank, observing the clean and organized building that, unfortunately, reveals systematic discrimination against him. The persistent disrespect triggers a shrewd idea in Bernard's mind. He formulates a brilliant plan to purchase the entire building that houses the banks. Knowing he alone couldn't pull off this deal, Garrett approached Joe Morris, a successful black businessman who owned 2 nightclubs. He proposed that they buy the Bankers Building, where most of the banks in Los Angeles were headquartered. At first, Joe thinks Bernard is crazy because that might be the most expensive land in the city, and there was not a single black-owned building in downtown Los Angeles. But why does Bernard want to buy this building? Well, if he owns it, the 12 banks inside will have to serve him. They won't dare refuse to give him a loan if they're the landlords, and they'll share real estate trends with him, making his real estate business even better. This idea shocks Joe at first, but after some consideration, he thinks it may work. Bernard's plan to buy real estate in white-only neighborhoods, which would make them a lot of money. However, since they are unable to deal with white people directly, they require a white person to act as their agent. Bernard already has someone in mind. The plan required what he described as hiring faces, white men, Matt Steiner, who has been helping him with renovations. Matt is an honest, ambitious, and a bit inexperienced guy. So, Bernard and Joe begin a training program for Matt. They taught him how to talk to white rich folks, how to play golf, high-class manners, mathematical thinking, and real estate skills. Matt lives up to expectations and quickly becomes an expert. The Bankers Building was owned by Charles Renault. It has 14 stories, 119,000 square feet of commercial space, and the tallest commercial building downtown, and was also considered the crown jewel of downtown architecture. At an expensive golf club, Matt, arranged to meet by Joe, encounters the owner of the Bankers Building, Charles. The conversation goes well, and Matt gets the meeting appointment to buy the building. Bernard helps Matt in getting ready for negotiations. He checks the lights in the building after dark, figures out the vacancy rate, and estimates the building's value using annual revenue and operating costs. Since Matt isn't quick at calculations, he memorizes everything in his mind before the meeting. As a result, no matter how much Charles bluffs about his property, Matt is always one step ahead, providing precise numbers that shock Charles and the accountant. In the end, Matt successfully bought the building, which was initially priced at over $2.4 million, for just $1.56 million. With the support of the banking industry, Bernard and Joe's real estate careers expanded rapidly. They break the strict zoning of Los Angeles's black and white segregation, allowing many young and promising black individuals to move into white neighborhoods. Bernard visits his family in Texas in 1963 to see his father, and he expresses his admiration for Bernard's achievements. The next day, Bernard takes his son on a stroll around town, unintentionally finding themselves in front of the bank where Bernard once worked as a shoeshine boy. Texas, known as one of the most racially discriminatory states at that time, holds a surprise for them. They encounter a young child shining shoes, mirroring Bernard's past. Bernard is surprised to find out that the child only shines shoes for white people. This seemingly small incident deeply impacts Bernard, instilling in him a sense of responsibility for others. Driven by a strong desire for positive change, Bernard takes on the challenge of addressing housing issues in his hometown for the black community. Discussing his plan with Joe, he proposes the bold idea of acquiring the mainland bank in Texas. Despite encountering initial doubts rooted in racism, Bernard highlights the undervalued nature of the bank, emphasizing the opportunity it presents for profit generation and support to the Negro community. With Joe's approval, they bring Matt on board as their representative and negotiate with the bank owner, Robert Florence Sr. and Jr., to finalize the deal. After gaining control of Mainland Bank, Bernard started working to help African Americans get loans for housing and economic opportunities. This is a significant step toward ensuring equal opportunities for his community. However, challenges arise when Florence Jr. begins investigating loans approved by their bank. Florence finds Matt and confronts Joe and Bernard about the approved loans. He warns them with a letter from the U.S. Treasury Department, stating that it will scrutinize the bank's activities in a month. During this time, Matt suggests a solution: acquiring another bank and transferring problematic loans from mainland to it. They considered buying First National Bank of Marlin. Bernard recognizes the importance of overseeing the new bank's operations. In response, Matt proposes taking the lead in managing the new bank on his own. Initially hesitant, Bernard eventually agrees, with the condition that Eunice keeps an eye on Matt. As a result, Matt fulfills his desire to run the bank. To complicate matters, a federal bank examiner arrives at Marlin to inspect the bank's papers. Bernard reluctantly disguises himself as a janitor to be present during the meetings. However, as Matt took control of banking affairs and signed unfavorable loans, they faced difficulties running the Marlin Bank and ultimately decided to step away from it. Matt, not wanting to lose his bank, secretly moves all the loans from Marlin Bank to Mainland Bank without telling his partners. When Bernard and Joe find out the next day, they rush to Mainland Bank to confront Matt. Federal bank examiners arrive to revoke Mainland Bank's license, and the FBI arrests Bernard and Joe. Bernard meets with McClellan, who offers him an immunity deal. Bernard has a choice: confirm Matt's testimonies and take the deal, or speak freely and go to jail. After the hearing, both Bernard and Joe face financial devastation. Only one of the 177 buildings they owned remains, registered in Eunice's name. In 1965, an all-white jury convicted them, sentencing them to 3 years in federal prison. Now, let's delve into the inside story of the Garrett and Morris case. They were actually accused of misusing funds from the Marlin Bank protected by the Federal Deposit Insurance Corporation, FDIC. The key question was whether Garrett and Morris, who owned a lot of shares in the First National Bank of Marlin, Texas, were covered by the law. They had the majority of shares, 5,470 out of 10,000, but they kept it a secret by putting them under Republic National Finance Company and in a trust with a business associate. As they had a lot of shares, Garrett and Morris could control who got appointed to the bank's board of directors, making up the majority. This meant they had a duty to protect the interests of minority shareholders and the bank itself. Garrett and Morris were accused of mishandling funds in a real estate transaction. They initiated a real estate deal through the Marlin Bank, aiming to buy real estate mortgages. But to pull it off, they needed more cash in the bank. So, they boosted the deposits by a whopping $1 million. After accumulating the necessary funds, the bank proceeded to purchase mortgages worth $970,000. The seller of these mortgages, in turn, transferred a sum of $189,186 to Valley National Mortgage Company as a commission for their involvement in the mortgage deal. This commission became a source of trouble for Garrett and Morris. It's important to note that Valley National Mortgage Company is a business owned by Garrett and Morris, and they had full control over its operations. Valley National Mortgage Company, under their control, opened a bank account in Houston, where Morris and Garrett were the only authorized individuals. Subsequently, the entire $189,186 was withdrawn by them through checks payable to cash or themselves. This sequence of actions raises concerns about the handling of funds and the potential misuse of resources for personal gain, forming the basis of the legal charges against Garrett and Morris. The court decided that Garrett and Morris were connected to the bank in a way covered by the law. Their ownership, influence over the board of directors, and active involvement in the bank's work made them connected as described in the law. Garrett and Morris argued that the law should be followed strictly, and the charges against them didn't have enough details. The court didn't agree and kept the convictions. The law, made to protect government-related banks, applied to Garrett and Morris because of their important role as major shareholders. After serving time, Garrett and his family built a successful real estate empire in the Bahamas. Garrett's banks really changed the lives of black people in the United States. Bernard Garrett could have functioned and operated and been successful without even thinking, what about African Americans in Texas? But he saw a bigger picture. Banks play a crucial role in our lives, serving as the bedrock for our dreams of business ownership or home acquisition. But what if these banks got greedy, prioritizing making money at the expense of ordinary people? The entire financial system could crumble. And that's precisely what happened in the 2008 stock market crash. Watch this video on The Big Short movie to understand the exact roles banks played in the 2008 financial crisis. Don't forget to like this video and subscribe to The Money Game to level up your financial game today.